Ever wondered why Bitcoin halving sends ripples across the cryptocurrency market? Let's embark on a journey to understand this seemingly complex concept. Bitcoin halving, a pre-programmed event in the Bitcoin network, slices the reward for mining new blocks by half every 4 years. Its purpose? To curb inflation, a common problem with traditional currencies. You see, with the current reward sitting at 6.25 Bitcoins per block, this reduction is a potent tool to slow down the release of new Bitcoins into the market. The result is a potential increase in demand, and consequently, a possible surge in Bitcoin's price. Now let's introduce the 5 phases associated with Bitcoin halving: the pre-halving period, characterized by high volatility, the pre-halving rally, the pre-halving retracement, the post-halving resistance, and finally, the post-halving parabolic movement. Now that we've got our basics sorted, let's delve into the historical patterns of Bitcoin halving. History often repeats itself, more so in the Bitcoin market. Let's take a journey back in time and analyze the previous Bitcoin halvings in 2012, 2016, and 2020. Starting with 2012, the first ever halving, Bitcoin was still relatively unknown, and the digital currency market was in its infancy. However, even then, a pattern emerged. There was a pre-halving phase marked by high volatility, followed by a rally leading up to the halving event. But the story didn't end there. After the halving, there was a significant retracement before Bitcoin found its footing and began a slow and steady climb to new heights. Fast forward to 2016. Bitcoin was more established, and the market was starting to take notice. The second halving followed a similar pattern to the first. High volatility marked the pre-halving period, followed by a rally. After the halving again, there was a retracement. But this time, the post-halving resistance was stronger, and the subsequent price surge was more pronounced. Now let's jump to 2020, the third halving. By this time, Bitcoin had hit mainstream consciousness. The pattern, however, remained consistent. The pre-halving period was characterized by high volatility, followed by a rally. Post-halving, the price retraced before breaking through resistance and entering a parabolic movement. This phase saw Bitcoin reach dizzying heights, further solidifying its position as the king of cryptocurrencies. Throughout these halvings, a few trends have become clear. First, the pre-halving periods are always marked by high volatility as the market anticipates the halving event. Second, there's always a rally leading up to the halving. Third, following each halving, there's a retracement as the market adjusts to the new block reward. Fourth, this retracement is followed by a period of resistance. And finally, once this resistance is broken, Bitcoin enters a parabolic phase, leading to significant price surges. As we've seen, each halving event has been a roller coaster ride, but what can we expect from the future? This question, my friends, is where things get really interesting, so buckle up and stay tuned for the next scene. The future is not written, but we can make educated guesses. As we gaze into the crystal ball of the cryptocurrency world, one event looms large on the horizon: the 2024 Bitcoin halving. This epical event is anticipated to usher in a pre-halving phase characterized by significant volatility. This turbulence in turn could fuel a rally, a surge in Bitcoin's price, which is likely to be followed by a retracement, a temporary fall in value. The halving itself, however, is merely the prelude to a broader narrative. Post-halving, we might witness resistance, a reluctance of the price to move beyond a certain point, but don't let this fool you. This resistance is often the calm before the storm, the silence before the symphony. It's a precursor to a potential parabolic movement, a rapid, significant price rise that could catapult Bitcoin's value to new heights. While these are projections, they offer valuable insights into possible market dynamics. In the world of Bitcoin, knowledge is power. As we've journeyed together through the intricacies of Bitcoin halving, we've discovered its profound impact on market dynamics. The halving process, which slices block rewards in half every 4 years, is a crucial mechanism designed to curb Bitcoin's inflation. It's during these periods that we've identified 5 distinct phases: the pre-halving volatility, the pre-halving rally, the pre-halving retracement, the post-halving resistance, and the post-halving parabolic movement. By dissecting these phases, we've gleaned insights from past halving events in 2012, 2016, and 2020. These historical patterns serve as a compass, guiding us towards potential price movements in anticipation of the upcoming 2024 halving. Understanding these Bitcoin market cycles is more than just an academic exercise. It's a roadmap for making informed investment decisions. Remember, the more you understand the Bitcoin market cycles, the better equipped you are to navigate the exciting world of cryptocurrency.